So transitioning to strategies, asset classes, markets, a lot of things have changed since COVID. I know pretty much student housing became the least favorite product after COVID hit, and oddly enough, downtowns, CBDs became tougher. So what's kind of when the deal comes across your desk, you go, oh yeah, we're all over this thing, we're going to be super competitive. What does that deal look like?
A student deal?
No. Across all asset classes.
What's the opposite of a student?
Yeah, what's the opposite of a student deal?
I mean, we like markets that national markets, top markets. Those are our favorites. But we'll play in the BC space as far as tertiary markets. We'll go. If there's any type of concentration, maybe there's a military base close by. That'll give us a little bit of agita. But typically, if workforce housing, I mean, we're all over it. Doesn't really matter where it is. Middle America, we're there. We do a ton of business in Texas, California, throughout the Atlantic seaboard, and we're really everywhere. But it's again, who's bringing us the deal? That gets us excited. You know what I mean? If you're someone that has 30,000 units and you want to bring us the deal, that's great. You know what? They're likely they know more about the deal than most other people do. They're seeing a lot of them. So again, it's the client that's really important. But yeah, I mean, the secondary markets are actually easier to get done than the top markets. And then because you're sitting there, you go into Boston, LA, Chicago, Miami. Local banks start getting involved, and those are harder to compete with.
Yeah, and I'll add that we've been very successful with Arbor in the tertiary markets, where other lenders have been, a little more timid, and so we've been successful. Arbor stepped up, said, yeah, we understand it, we understand your business plan, and we get the smaller market, and those deals have turned out very well. So that is definitely an advantage of you guys that I've noticed. And so, what about you? What about deals that come across your desk? What gets you excited?
Well, Texas is sort of our bread and butter, Texas and surrounding states on the lending side. For equity, it's much more nationally focused for Flagship. But our bread and butter is Texas. We've done deals in various, really every market across the whole state. Similar situation. We're obviously quite comfortable doing tertiary markets in those areas. We've done some recent deals in Arkansas and Oklahoma. And there's good job and growth stories there. We love to see that. I think I was really. It goes back to what I said earlier, which is it's relationships and it's experience. And we're not looking for somebody that has 10,000 units under their belt, but we want to know that there's that knowledge and that capability and the integrity piece. So those are all. And we're doing business with new sponsors every day, but when I say new, I don't mean somebody who's never done a deal, never swung a hammer or never managed a construction project, and now it's going to take down 240 units. It's right. Like, yeah, come back in a year, we'll see how that one goes. But we're also open-minded. If it's clear that this sponsor maybe does not have deep experience, but has a proven story on a project or two before that, we love to see those deals, and we want to help people grow to that next level by partnering with them in that situation.
So you said that you were seeing deals from new sponsors, not as an inexperienced, but new to you, new to
Correct.
the platform,
That's right?
right?
Yes.
Yeah, and obviously Arbor's a huge shop, so you guys are seeing new borrowers all the time as well. Mm-hmm. And you can't learn everything about somebody in a day, but with that being said, first impressions are really important. So what are the kind of the key things that you're looking for on that initial email, that initial phone call, initial meeting that goes, oh yeah, you know what, this is actually a sponsor that I may want to do business with and take more seriously?
Like a huge social media presence, for example.
Yeah,
for some person.
Like a big TikTok. Anyway, that's the question.
For Flagship, trying to think what, you know.
Tie, no tie, you know.
Yeah, I mean, it really goes back to what I said earlier. Do you know your deal? I mean, it's very simple. It's, you know, you get on a call and people are just, they don't have any answers for you. It's like, well, why are we having this conversation? And it really bodes poorly with our principals, because time is really of the essence in our shop. We're a small group. We're trying to get business done. Man, when someone's stammering on the other end of the phone, that is just a killer. That's end of conversation right there. The phone goes on mute. And then, yeah, the discussions begin on our side. And it's like, well, why are we having this conversation? So preparation, I mean, that's what it's all about to us. Know your deal. It's really important.
Well said. Yeah, and it's also the package you submit too, right? So if you're sitting there and if it's a refinance of a deal that you already own, and you know the historical operations are a mess, and you provide me something that's on, you know, the back of a napkin, and you're not using software, it's like, all right, well, they're not a sophisticated operator. You know, that's one concern that you're going to have. But you know, if you're sitting there and it's a bridge loan, you send in a package and you have unrealistic assumptions. You're saying, you know, you're going to grow higher than the market's growing, or you're going to attain rents that no one's getting in the market. You've said, okay, well, we're going to change that back to whatever the market's been doing for the last couple of years, and then we're going to put in what rents are today at the premiums, you know, for a renovated unit. And then we'll cut it back and we'll say, all right, well, your NOI was X, ours is Y. Either it still works or it doesn't. But, you know, if you're sitting there and you're making unrealistic assumptions, it's going to be hard for us to get on board.
I think taking that a step further, you know, we're also checking when somebody gives us comps, whether that's sale comps or rent comps, and we're checking that, and it's really disconcerting when somebody clearly hasn't done their research, or maybe the numbers are juiced a little bit. That's very disconcerting, and you know, the conversations don't really progress from there.
So let's stick on the package. I like this topic a lot. You know, on the debt side, you as a sponsor, we're often approaching lenders before we actually have the deal under control, right? Because the valuation of the real estate is highly dependent on the leverage, on the financing. So with that being said, we don't have often the opportunity to put together a full book and the full. So you know, the point is, what is the optimal amount of information that, okay, this guy's done his homework, but you know, hey, he hasn't put together the full package. So what's the ideal? What's, you know, just enough information, but not too much.
I mean, if you're talking about just your standard agency deal, I mean, you need a trailing 12 historical operations, rent roll, your year one pro forma, and that's really all we need. You know, depending on what the scope of it is, if you're just planning on buying it and operating it as is, you know, small business plan. But, you know, if there's a value add component, we're going to want to hear more. Obviously, a bridge loan is going to take a little bit more. We're going to want to see your CapEx budget detailed. We're going to want to see a 5-year pro forma, and then a little bit more detailed business plan. But, you know, we don't necessarily need your comps because we're going to get our own anyways, and we have them in-house. So if you have them, that's great. It shows that you did your due diligence, and that's great. As long as they're the right comps. If they're the wrong comps, it's not going to help. But yeah, I mean, it's really not that much. It's less than you would think.
And for you guys?
So, looking for an initial indication of interest. We're a small group. We can, you know, have these conversations. I think to try to get down to real business terms and whether or not this deal is going to work for us, I think we need a lot more information. But for initial indication of interest, I think there's probably not that much information that's needed just to see, okay, is this a market that you'd be willing to lend in? Is this a situation that you'd be willing to lend in? You know, does the project seem to make sense to you? Is the because we're a niche lender. You know, we don't have the capability of doing thousands and thousands of deals a year. I mean, we don't compete with Arbor in that way. So for us, it's there's a box, you know, and our hope is to not waste anyone's time, and so we want to try to give you an indication as quickly as we can about whether or not this is even in the realm of what we do. But then, in order to get, you know, real business terms out, we need a lot of that similar information. It's very difficult to put a term sheet in front of someone without having all the backup and you know, the detail of the project.
So one other topic that I'd like to cover is it's a very competitive market. There's a lot of other sponsors that we as buyers are competing against, and how do you guys as a lender align yourselves with your borrower to really help them through the buying process, whether it's kind of giving them a nudge or maybe a phone call recommendation on invest in final, or some sort of juice that they can get. What's one of the ways that you can help sponsors get over the line and actually win a deal in this market?
Some of the things that we see is just, the pure volume. We're doing, I was telling Mark earlier, we're probably screening about 150 deals a week. We're closing over 1,000 a year. So it's about 20% hit rate on screen versus close. But we have so much in-house data, just as far as what deals are closing at, what deals are currently performing at as far as comps on rent and expenses. So if you're trying to craft your NOI and you're saying, hey, do you think we can get this $500 a unit on R&M realistic in this market? What are you seeing? What do you have in your portfolio? It's like, well, we're seeing everything operating around 800. So you might want to craft your your template a little bit different to account for that. But those are the things that we can do. As far as nudging brokers and things like that, that's that's a little bit different. But we can always sit there and give you the best terms going in, so you know what you're up against, and you can put your maximum number out there and feel comfortable about it.
And not retrading.
Yeah, that is something that we are definitely not interested in doing, is retrading. That's the last thing. I was talking to someone the other day, and they're looking to get a new lender just because the last 3 deals they did, they got retraded the last week. No one wants to sit there thinking that you're going to have a $10 million loan, and then you have to scrounge up another $500,000 the last week because it's now 9.5. That's frustrating.
Yep.
That's something that we try to avoid at all costs.
I think for us, probably more the experience of understanding what renovations really take, and experience from the operational side of a transaction, operating the complex or something along those lines. That's probably our best value add. Look, we're not a giant shop. We don't have access to the same data. We do see quite a few deals considering our size, and so we do have pretty good knowledge of what's going on in the markets. But to be able to give you operational data of dozens of places, unfortunately that's not really what Flagship offers. But we do have sort of a very personal approach that I think you touched on it earlier, and it's the same on our lending side. We are very we answer quickly. We turn around CapEx reimbursement requests very quickly, and are realistic about the fact that people are trying to continue moving on with their projects, and so you can have some comfort knowing that that it's not going to be put on someone's desk and sit there for several weeks for somebody to ultimately get to it. But again, and I say this because it's just a very high touch kind of situation, and on the front end all the way through to payoff, basically.
Yeah, you make a good point. It's not just about the origination; it's about the servicing of the loan. If you can originate a loan and then the servicing's a nightmare, it's not worth it. So I think that's a good point. As an asset management, it's very important to have good hands-on team.
Absolutely.